Let's talk to Ryan Littlestone. He's a trader and analyst at ForexFlow.live. Very good morning to you, young Ryan.
Good morning to you, Nick.
Right, we have one slide. Let's kick off without further ado. The dollar against the Chinese currency. What are you thinking?
Yeah, well, this is one we've spoken about before, obviously with the trade spat going on between US and China. This is a pair I've been shorting for quite some time now, back to August. Because we've got a huge level up at the 7 mark, which is holding some big officially defending barriers there. And they're always something you have to pay attention to, because the size of the PBOC, if they're in the market defending something, they're going to throw some weight behind it. So potentially we've got this Trump Z meeting at the G20 towards the end of the week, where the market is going to be looking to see whether there's any resolution to these trade talks and these trade problems. If we get something along those lines, then this pair's going to fall big time. But on the flip side, if we don't get anything, or if it doesn't meet the market's expectations for resolution, then this barrier is going to be under fire pretty quickly. Okay, so effectively we're selling into resistance. I look at that chart and look at the rate of ascent, all right, and that worries me. And you know, the technical books, the whiz kids on the technicals would say that this is sort of almost like some sort of triangle formation with a potential to break to the downside, I would guess. If I was looking at that purely technically, didn't know what currency pair it was, okay, I'd be thinking about this is a top. Yeah, definitely. Hence the reason why we've been selling it. And, we've been up at the top selling sort of 95, 96, 97, all the way up, and offloading every time we've had some good news that seen it spike lower down to under the 90s. That's been the way to trade it. But irrespective of what's going on in the trade stuff and the meetings between Trump and Z, this is a big level up here at 7. It's a very big level. Historically, it's a big level. So like you say, on a technical basis, it's a good level to trade off anyway. You can have a fairly tight stop against it if 7 breaks and it looks like it's going to go, or you get out the trade and move on to the next thing. But like you say, technically, you've got to trust what's in front of us, and if you've got official interest defending a level, as we learned from others from the SMB, you can't trust a central bank, but you just got to take each situation as it comes. And if this 7 level broke tomorrow, I'd get stopped out, but I've already made my money in selling the rallies and closing off on the dips. Well, on that note, we wish you well. That's Ryan Littlestone from Trader at ForexFlow.live. Thanks, Nick.